Welcome back, dear traders. You are watching a recap of the American session. Our analysts have already determined the main trends in the stock market, and they are ready to share them with you. Stocks have been trading mixed since the start of the week. Despite a rise in pre-market trading, the main stock indexes failed to climb higher. Traders are keeping close tabs on news about central banks' rate decisions. Risk appetite has decreased again. It means that the likelihood of a rally ahead of the Fed meeting is extremely low. The US stock indexes started the week with modest gains despite a sharp jump in pre-market trading. The Dow closed a rather volatile session with a small increase of 0.1%. The Nasdaq added 0.4%, and the S&P 500 rose by 0.3%, hovering at highs of 4,121. In the pre-market, the index slid into the red zone. Stock indexes are losing approximately 0.6 and 0.9%, signaling a sluggish session on Tuesday. The S&P 500 is likely to stay in the daily range of 4,010 and 4,120. The major US stock indexes ended high on Monday. Amazon shares rose 2%, becoming the biggest positive for the S&P and Nasdaq. In addition, US-listed Chinese technology stocks rose on Monday after a report that regulators in China are concluding a probe into ride-hailing giant Didi and two more firms. The strong non-farm payrolls report has confirmed that the US economy is expanding steadily, so analysts reckon that inflation may not have reached its peak yet. Apart from that, investors were caught off guard by the Reserve Bank of Australia's 50 basis point rate hike. It was the biggest single rise in the cash rate in 22 years. The regulator also signaled further monetary policy tightening, and so traders are worried that other central banks may start hiking rates more aggressively to tame soaring inflation. Policymakers need to have room for maneuver if the economy shows signs of a slowdown. As a result, uncertainty has returned to markets. It may persist for a long time. A gradual increase in the key rates is likely to spur volatility in the stock and bond markets. In the light of recent inflation results, US government bond yields also went up. Investors now await the release of CPI data on Friday. Meanwhile, Elon Musk warned Twitter he might walk away from the $44 billion deal to cure the social media company if it fails to provide data on spam and fake accounts that he seeks. Meanwhile, the US dollar index trades at around 102.82 points. It's anticipated to move in the range between 102.10 and 103.40 today. The dollar index rose above 102.50 on Tuesday and attempting to climb to the third straight day as the risk appetite decreased. Investors braced for the US inflation data this week. Additional support for the greenback came from a 10-year Treasury yields that exceeded 3% for the first time since early May. Today, however, 10-year Treasury yields have already lost 1.8 basis points, although remained above the 3% target. As for fresh macroeconomic data in the United States, figures came in optimistic. The trade deficit in the United States narrowed to a 4-month low of $87.1 billion in April from a record of $107.7 billion in March. The region missed market forecast of $89.5 billion. Export increased by 3.5%, led by natural gas, other petroleum products, soybeans, civil aircraft, travel and transport. Imports declined by 3.7% due to lower imports of consumer goods and household goods. As for the USD CAD pair, it failed to return to April lows and instead reached a remarkable high of 1.26. The trading range for the day is found between 1.2550 and 1.2640. A confident rise of the US dollar pushed the pair back to new upward targets. Oil prices that traditionally support the loonie began to decline after a short spike above the level of $120 per barrel. WTI crude went lower by 0.45%, while Brent crude fell by 0.31%. The fresh macroeconomic data also failed to support the Canadian dollar. Canada's trade surplus for April 2022 stood at $1.5 billion, down from $2.3 billion months earlier and far below the market expectations of $2.9 billion. Imports increased by 1.9%, driven by large purchases volumes of consumer goods, metals, and energy. Meanwhile, exports grew at a slower pace of 0.6%. As we can see, the outlook for the loonie is pessimistic at the moment. And in the crypto market, trader sentiment is also low. Bitcoin has already lost all its gains from yesterday, indicating that a new bullish rally may not come soon. The number one cryptocurrency failed to consolidate above the mark of $31,500 and slipped below the level of $30,000. At the moment, bears are fully in control of the market. The trading instrument is declining by 5.7% and demonstrating a negative correlation with the US dollar. This confirms the overall risk aversion mood of the market. It's still too early to talk about a collapse in crypto. Bitcoin is simply trading in a very wide range between $28,000 and $32,000. In the coming hours, the coin is likely to stay in the channel between $28,000 and $30,200. These were the main trends for the coming session. Markets remain highly volatile and are far from being optimistic. This is quite natural given the uncertainty in the global economic situation. Today, traders can face unexpected spikes and changes in the market sentiment, together with a complete standstill. Whatever happens in the market, we hope that your trading strategy is wise and your session ends with gains. Good luck and see you soon!